Hi, my name's Tom Meitzel. I'm a licensed real estate broker and investor. I'm licensed in multiple states. I've successfully closed about $100 million in transactions to date. And we're going to talk today about alternative financing. Alternative financing is actually how I got started in real estate, since I didn't have a lot of money and did not qualify for a bank loan since I was self-employed. The reason you use alternative financing is just for that, is because the banks won't lend unless you have a very strong financial statement. However, when you're using something called a land contract or a contract for deed, it is actually an owner finance situation. What that means is there's no bank involved. The owner actually acts as the bank. The amount of money you need to put down as far as a down payment is negotiable. The interest rate is negotiable. Everything is negotiable, and frankly, if the owner likes you, there's a good chance that they will do a land contract. So a land contract gives you the opportunity to get into the market even without a lot of cash out of your pocket. Now, when the market's going very well, there are not very many opportunities to do a land contract. The owners would rather take the cash and have their cash and move on to another deal. A lot of people also need the cash out of their current home in order to finance their next home. However, on occasion, you will find an owner that will do a land contract or a contract for deed, and it might be worth considering. The first properties I ever bought were 2 duplexes, and the gentleman was retiring. He wanted cash flow, which we're going to talk about in a moment, and we negotiated the deal where I gave him about 5% of the value of the properties down and made payments to him as the bank. Now, the advantage to the buyer is that the cost of doing a land contract can be pretty low. Typically, you're going to want to have an attorney draft the agreement, but as far as qualifying for the loan, if you can negotiate with the seller on the down payment and the interest rate, if the seller likes you, you are qualified, because the only person that has to make that decision is the seller. Now, if there's an underlying mortgage on the property, that's a different situation, and you're going to need to consult someone, because on that situation, the bank does have the right to call the loan if there's an underlying mortgage. However, if the home is paid off, there is no reason the owner can't simply carry the financing. So the cost of doing a land contract can be pretty low. I've seen land contracts with $0 down. I've seen land contracts where the owner wants 50% down. Doesn't really matter. It's all a negotiation. Another reason that the land contracts are a good deal in many markets is that it's an alternative method for people to dispose of their property. We're coming out of a very bad economy, and what was happening was that people couldn't sell their homes, so they were willing to consider alternative methods of actually disposing of the property, and a land contract to you might be perfect. Now, a land contract typically is not going to run for 30 years like a bank loan. It might be amortized, meaning the payments are calculated as if it was going to be paid off over 30 years, but really a land contract is going to run for 3 to 5 years typically, with maybe a renewal option at a higher interest rate. So it's not a permanent solution, but it is a good solution to allow you to get in on a market that is going to be appreciating. Some seller advantages are, right now bank rates are under 1%. If the seller doesn't need all the cash, it's a huge advantage, because he might charge you 4, 5, 6, 7, I've seen as high as 12%. That's all a negotiation based on what you can get the seller to agree to. But let's say it's 6%. That's 6 times what they're going to be getting in a bank. The other advantage is the property is a security for the transaction. So if you don't pay the seller can go through typically what's called strict foreclosure. It varies from state to state, but they don't have to go through typically a judicial foreclosure proceeding, so they can typically get the property back much quicker. But once again, that varies from state to state, and that's a question for your attorney. But the big reason the sellers will do this is for the cash flow. If the home's paid off, they're in retirement, or they don't need the cash right away, the cash flow coming in each month is something for them to live on. So a couple things to remember on land contracts is that a land contract is where the owner acts as the bank. The interest rate, the down payment, the terms are all negotiated between you and the seller. If the property has an underlying mortgage, you need to be aware that it could trigger a due on sale clause, so that could cause some problems. You need to consult your legal advisors at that point. However, for a seller, it does provide cash flow, pretty strong security, since if you don't pay them, they're going to get the property back and they're going to keep all the cash that you've paid them. So if you have any other questions, you can reach us at homewithtom.com, or you can check out our blog at madisonhomesales.com, and we'll be happy to answer any additional questions that you may have. Thanks, and have a great day.